Ladies and gentlemen, welcome back to the channel. We're back. The selling is still here a little bit, but this is definitely a better day than what we have been used to. Now, we're going to go over all of the news you need to know, what's happening in markets today, why you're seeing a little bit of this recovery, if it's going to last, and what the next big catalyst will be for this market. So, the work is cut out for us here in today's episode. Hit that like button as well as subscribe to the channel if you have not done so already. If you guys want to come check out the trading community, check that link out down below. Some of our favorite stocks are pretty deep in the green today. The latest purchase, this one on screen, is up 20% today. Pretty incredible. We have a video coming out on that one later today. But check that link out down below to come join the trading community. With that said, let's get started. First things first, Dan Ives says that he expects tech stocks to have a major rally into year end. It did seem like today some of the sentiment started to flip a little bit after you've seen so much pain in markets for the last 6 weeks or so. You're starting to get some people that are a little bit more constructive on this market. Okay, and we'll discuss this throughout today's episode. But look, small caps, IWM, okay? IWM is still down over 6% right now from its recent high that you set on October 15th. So almost a month ago, down 6%. At the low of the day today, you were down almost 8%. With the NASDAQ, nasty NASDAQ, I mean, you're down still over 4%. From recent highs. You're down about 4.3% right now. At the low of the day today, you were down almost 6% from your recent highs. Okay, so you've seen a correction in the indexes at this point. What's interesting is you've seen the smaller cap trade, the AI small cap trade specifically, get absolutely washed out. Okay. If it's AI and small cap, it's down a lot right now. Part of that had to do with the government shutdown, the fears that the economy is entering into a recession. The other part of that has to do with the Fed. The Fed is saying all things are fine. They're not worried about the economy. They're worried about inflation. And we don't even have the jobs report for October, but the estimates were negative 60,000. So Wall Street's saying, is the Fed making a policy mistake? Are they going to drive this economy into a larger recession? And that's a tough force to fight. Okay. And that's what is attributed to the sell-off in, AI. Even something like CoreWeave down 30+% in the last month. Okay. Oracle's down over 30% in the last month. It started to hit your big guys, your large stocks. And once it starts to hit the large stocks, you really have to start justifying the sell-off, right? It doesn't take a whole lot for Wall Street to justify small cap, unprofitable AI selling off, okay? A lot of people can justify that. A lot of people don't care about that. But when you start to see Oracles and the CoreWeaves and some of these larger companies selling off, then it's like, okay, why, right? Let's justify this. And it seems like there's a little bit of a tone change today. Maybe it was because Jim Cramer last night was drawing parallels between today and the dot-com bubble. Maybe the inverse Cramer effect hits once again. And I think just generally Wall Street things got washed out. Okay, that easiest way to put it. Bitcoin dropped 5% today to about $94,000, and Ethereum fell about 5% as well. So if you look at Bitcoin, BTC, I mean, you're still sitting at $96,000. The recent high was $126,000. That is down 24% right now from its recent high and was down over 25% at the low of the day today. So, I mean, you've seen this reset, you've seen this correction, and it looks like maybe we're just getting to the end of the corrective cycle. Now, this is good news as well. U.S. Labor Secretary Chavez Dermer says the September jobs report was collected but not processed. So maybe we get the jobs report. Chavez says, I am hoping the September jobs data can be released next week. U.S. Secretary of Labor Chavez says unsure if BLS will be able to release the October CPI. So, when Caroline Leavitt initially said we may never get the October CPI and jobs report, that read, and this was like 2-3 days ago, that came across as like one of those things where it was so bad they just didn't want to release it because it was so bad. Whereas I think you're starting to have this understanding that the government shutdown was the reason we're not going to get the data, not that it was so bad the government just didn't want to release it. Does that make sense? Because initially when that came out, stocks did not like when Caroline Leavitt said that. Now, Morgan Stanley says NVIDIA is poised for a breakout quarter. Morgan Stanley expects NVIDIA to post its strongest quarter in a while as Blackwell chips ramp fast. The bank raised its price target to $220 and kept an overweight rating. Analyst Joseph Moore says NVIDIA has trailed other AI names, but Blackwell remains the top chip in demand, especially for Vera Rubin is very strong. Industry checks show a clear acceleration after earlier bottlenecks were fixed. CEO Jensen Huang suggested revenue estimates need to rise by 70 to 80 billion. Morgan Stanley boosted its forecast, but notes NVIDIA's stock is still about 10% below where it traded after his comments, pointing to a disconnect with broader AI sentiment. Now, the U.S. Commerce Department says U.S. Q3 GDP's second reading will be released on November 26th at 8:30 a.m. So I believe that is next week. That is not next week, not next Wednesday, but the Wednesday after that. So about 2 weeks from now. Okay, so it looks like we're going to start getting some economic data. Now, the U.S. Commerce Department also says that October personal income spending and PCE inflation index to be released on November 26th at 10 a.m. So it looks like in the next 2 weeks, we're going to have quite a bit of data and a better understanding of where this economy is at, where inflation is at. And I think again, when estimates and expectations are this low, and then we finally get news like, hey, we're actually going to get data on a certain day, the odds become, better for a reversal, right? It's like you can only stretch a rubber band so far before it breaks. You've already stretched that rubber band on expectations the economy is not doing great, and now we might get signs that the economy is better than expected, and some people might be pricing a little bit of that in today. Wells Fargo today raised their NVIDIA price target to $265 per share from $220 per share, and they kept an overweight rating. Analyst Aaron Rakers raised estimates for full year 2027 through 2028 on stronger hyperscaler CapEx and continued AI data center momentum. U.S. Trade Representative Greer said it's time to take off some tariffs on products that are not made here. Greer says bananas, coffee, and coca tariff relief, is mutually beneficial. And U.S. Trade Representative Greer on Switzerland trade says we've essentially reached a deal. USTR Greer on Switzerland trade says they're going to send a lot of manufacturing to the U.S. And Greer says the Swiss to have a 15% tariff rate similar to the EU. Michael Saylor on CNBC says, quote, we've put in a very strong base around here, referring to Bitcoin. U.S. Trade Representative Greer says the U.S. is to announce food tariff exclusions today, food exclusions to apply to countries with and without deals. The idea is to lower food prices. And MicroStrategies Saylor says Strategy is buying quite a lot of Bitcoin. Now, per CNBC, hedge funds are still dumping stocks while retail investors keep the bull market alive. Now, the percent of stocks trading above their 50-day moving average is actually negative today, again, down about 2.5%, sitting at very correctionary levels. So again, in certain areas of this market, like small cap AI, you've seen a full blown crash. In the Russell, you've seen a better part of a correction, down 6, almost 7% from highs in recent days. NASDAQ, you've seen more of a typical 5, 6-ish% correction. So some areas have got hit really hard on this. And I think some of those areas that got hit the hardest, at least the quality stocks within those areas, are going to be some of the ones that bounce back the most. In fact, some of our stocks that we've identified in the trading community that have been getting smoked recently, just because, guilty by association, they are a, hyper growth, small cap companies. Well, they're cream of that crop. And they're rebounding 5, 10, 20% today, some of them. So, it's you do want to be selective with the stocks that you are buying. You don't want to be buying the worst quality of the hyper growths. But if you're buying the quality of that group, I think a big rebound is in store into the end of this year. Now, CNN Fear and Greed Index coming in at 23. You are in extreme fear. Market momentum is fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand is fear. Junk bond demand in extreme fear. And I think at this point, with markets as bearish as they are, you get a good earnings from NVIDIA, which is the base case expectation. You start to get economic data that shows the economy is not teetering on the edge of a recession, and boom, you're in store for a pretty aggressive end of the year rally. Okay, not a lot has actually changed in the last couple of weeks besides the government shutdown, and we just can't even quantify how much damage or lack of damage that did to the economy. So for some of these stocks to fall so much, there's not a lot to justify it besides sentiment and people being nervous. So we'll see. Could be in store for a pretty aggressive upside rally into the end of this year. Now, the AI Investor Sentiment Survey just recently came out yesterday. 31.6% of investors are bullish, which is the lowest level you've had in well over a month now. Neutral investors at 19.2% and bearish investors at 49.1%. Again, highest numbers you've seen in well over a month, which makes sense just with how much damage has been done in markets recently. So again, as we talked about throughout this video, I think you just got to a point where people were so bearish, it doesn't take a lot of good news to cause markets to rebound. And I think part of that good news today is confirmation that we will actually be getting some of the economic data that we missed. Now, I think when you try to, dig through the weeds, if you will, of that, I think, Wall Street's saying, okay, crap, well, it was easy to short this market while we were not going to get economic data. But if we're going to start getting economic data again, they probably don't want to be short this market. They probably want to be long this market because people's expectations for this economy are in the dirt, okay? Odds are it's not as bad as feared, okay? And if it is as bad as feared, getting clarity on that will prompt the Fed to cut rates. So either way, getting confirmation that we will get the economic data is a good either way you really want to put it, okay? And then, again, you've just been so oversold in this market that it didn't take a lot of good news or even just clarity on when we're going to get the economic data to get a bit of a reversal in anticipation of that. Now, what matters next? Well, NVIDIA earnings, definitely going to be a massive catalyst coming here in the next week or two. That's going to either confirm or deny the AI story. Is it alive and well, or is it faltering? Well, it's alive and well, okay? Jensen Huang, AMD, they've all come out and said AI is alive and well, okay? People just, when the markets start to crash, they start to look at the hottest sectors, the hottest areas carrying the markets and say, oh, this is a bubble, it's popped, it's unsustainable, blah, blah, blah. people try to justify why they're bearish, okay? Or why their, portfolios are going down. AI is alive and well. AI is going to be around with us for a very long time. It's going to shift. It's not all going to be about GPUs. NVIDIA is not going to be the stock that leads this market forever. It will shift into more of software and robotics and real world AI inevitably over time. But for right now, NVIDIA is going to be a big part of this end of the year rally, which could be coming still. I mean, it's only November 14th, and a lot of people have wrote this market off into the end of this year. And usually when people are this bearish, when retail has capitulated, got margin called, and they done left, the markets, that's almost exactly when stocks tend to rebound normally. And it seems like we're pretty much at that moment. And thus, I think we're set up for a pretty strong rally here. But again, I'm not a financial advisor. I'm not a financial planner. We will be going over this more in videos over this weekend, specifically like the earnings lineup. We do have like Walmart earnings and like Target earnings next week as well. And that's going to be big also because we don't have a lot of economic data. We're going to miss some. We're going to get some. But, Walmart, if they tell us things are terrible, that's a red flag. If Walmart says that things are largely the same, that's a green flag, right? You can get a lot of answers from the consumer and the economy just by something like Walmart earnings. And that's something I'm looking forward to next week, to say the least. So let me know your thoughts on all of this down below in the comment section. Again, if you guys want to come join the trading community, check that link out down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.